Ladies and gentlemen, welcome to our weekly investor update. My name is Rachel Curlew, Assistant Vice President of Investment Banking, and I'll be your host for today. First, I'd like to say what a pleasure it is to be here. As you know, our weekly investor updates keep investors and the general public up to date on the local and global markets. Joining me today is a familiar face, Percival Braham, one of our talented and brilliant investment advisors here at Mayberry. Welcome, Percival.
Thanks, Rachel. It's great to finally have you on the show, and I'm also excited to be back and even more excited to get into this presentation with you.
Thank you, and it is a pleasure to finally be here. If you're a fan of the content, then don't forget to subscribe and hit the bell to stay up to date with the channel. We upload content like this every week. And that's why if you are looking to embark on your first investment journey, you should take that first step with Mayberry. So follow us on social media at Mayberry INVJA to learn more about how you can get started today. As promised, we will begin our presentation on PanJam, RJR, and Fesco. So I'll start off with Fesco. Let's dive into Fesco. Fesco launched their IPO in March 2021 at 80 cents, raising about $400 million from the market. The stock currently trades at $5.97 and has a 52-week high of $8.49. At the current price, that's a 7 times increase on your investments. We're also seeing where the stock is trading at a PE of 58 times. Examining their financials, Fesco reported a whopping 116% increases in revenue to $12.6 billion, up from $5.8 billion reported last year. Their cost of goods increased accordingly to $12.2 billion. Their cost of goods increased accordingly to $12 billion, up from $5 billion reported last year. Their expenses also showed a generally upward trend of 126% to $133 million relative to $59 million reported last year. With a 52% decline in finance income, Fesco managed to report a 135% increase in net profits to $253 million relative to $108 million reported last year. That translates to an EPS of 10 cents. From the quarterly profit movements, we'll see for the quarter ending March 2022 that Fesco reported almost $100 million in revenues for the quarter alone, almost double what they did last year quarter for March. Quite impressive. Moving on to the stock price, we've seen a general uptick in the price. As I mentioned earlier, we're coming from 80 cents to 5.97 cents now, a 7 times gain on your investments. They have a 52-week high of 8.49, and the PE is trading at about 58 times. I personally like the stock. I bought it at IPO. I bought some more at $2, sold at $5.50. So I've already realized 7 times on my investments. The company does trade at a relatively high PE, and as investors become more knowledgeable about the market, we believe the market may correct itself, but the long-term prospects for Fesco still remain good. For the quarter ending March, they introduced a new gasoline blend, E1088. Their Beachwood service is also open 24 hours now, and they're going to be introducing their ATM shortly. They also have a lunch and dining restaurant as well there, so that's pretty good. Their Ferry location recently opened its convenience store and tasty restaurant, so we're definitely going to see some uptick in revenue for the next 12 months. So yes, it's trading at a high PE, and yes, the market may correct itself, but we will definitely see another bump in revenues in the 12 months to come. What are your thoughts, first of all?
Well, I couldn't agree with you anymore. with your analysis, Rachel. Fesco is one of those stocks that persons who would have gotten in at IPO price, if they still have the stock now or even earlier in this year, March, they would have seen some significant gains. I totally agree with you also that there will be some market correction as we're already seeing with the stock. However, it is a stock that I think persons can be adding to their portfolio now to see further gains over the medium term. So the company is looking to expand. As we already know, they have fully operationalized their Beechwood Avenue property. The one out by ferry fully operationalized as well. So the company is looking to open more service stations across the island, which will increase their the percentage of the market that they cover. They want to go quickly into their cooking gas business and water distribution. So we know as soon as these projects become realized, then we know that this will increase the revenues that we see for the company, so long as they manage to also minimize or contain their expenses, then it will see increases in their net profits as well. So for me, it's definitely still a buy right now, but I would not recommend it as a buy that someone is looking to flip in the short term. I think generally speaking now, the market is at a point where if you're buying stocks, you shouldn't really be looking to do a flip, especially with the outlook, which is not so bullish, more bearish at this time. I think you should be looking to add Fesco in your portfolio to some gains over the medium term.
Great. I absolutely agree. So on to you with RJR.
All right, great. So on to Radio Jamaica Limited. And continuing on the same vein from which Rachel started in terms of companies that you can add to your portfolio for the medium to long term, RJR is definitely one of those. So RJR Gleaner Communications Group continues to be the largest news and media outlet here in Jamaica. The company recorded revenues of $4.31 billion for the year, which is a 14% increase from the previous year. And they also saw an increase in operating profit of 70%, moving up to $351 million from $206 million. Net profit recorded at $245.5 million. Very impressive for me is the company's total assets, which currently stands at $5.11 billion, and shareholders' equity seeing an increase from $2.4 million to $2.7 million. The current share price for RJR is $2.82 per share, and it's trading at a PE ratio of 23.6 times for the market, which is a little bit above the junior market PE of 18.83 times. Now, the outlook in my mind for RJR is very positive, even as currently they are finalizing the acquisition of 1834 Investments Limited, formerly the Gleaner Company Limited. So the deal which was presented to shareholders originally saw an offer being made for 0.40 of RJR shares for each 1834 Investments Limited shares, and that was revised in April of this year from 0.40 to 0.490 RJR shares for each 1834 Investments Limited share, which is a better offer for the 1834 investment shareholders. Another condition to that deal is that if the shareholders do not choose to take that option, they can get a cash payment of $1.29 for each 1834 investment share, or a combination of shares in RJR and cash. The proposed change is to ensure that shareholders in both companies receive optimal value, and the revised proposal falls within the range which is fair from a financial point of view, and has issued a fairness opinion to this effect. So it is my view that upon the completion, hopefully, of the acquisition of 1834 Investments Limited, the combination of the two companies will see an increased revenue for RJR, with cost and operational synergies, rather than running both companies as separate legal entities, which bring two sets of costs. RJR, I also believe, after the amalgamation, will own the building at 7 North Street, which houses its print operations, among others, and RJR will be better able to use the building without regard for separate boundaries, services, and facilities. So this is a deal that I believe will see increased revenues, net profit, and operating profit for RJR in the medium to long term. We see the quarterly profit movements for RJR has been steadily increasing for the first 2 quarters when comparing the years 2020 and 2021. We see, however, a difference for Q3 in each respective year. However, we do anticipate that for Q4, given the anticipated completion of the acquisition of 1834 Investments Limited, we should see an uptick in profits for the company, even as we anticipate that the share price will also go up. So when we look at the stock price history for RJR, we see where the stock has traded at a high of $4.44 in August 2021, a low in July 2021 of $1.62, and it, as I said before, it closed trading at $2.82 yesterday. It is anticipated that over the next 12 to 18 months, there should be an uptick in the stock price for RJR. And as I said before, if you're looking to add a stock to your portfolio, which will be seeing appreciation over the medium to long term, this is definitely a pick. It is a stock that you can anticipate at least an appreciation of about 20% minimum over the short term, but over the medium to long term, we can anticipate far more. We know that come the end of this year, the revenues and profits for the company will go up, because we know that whenever there's a major sporting event which is broadcasted by RJR, there's normally increased viewership and increased advertisements, which leads to increased revenues for the company. So you can look to see the price for RJR going up closer to the end of this year, going into early next year. So RJR is definitely a stock that I believe you can add to your portfolio, and you can see some positive gains in terms of price appreciation over the medium term. What are your thoughts, Rachel?
Yes, I definitely agree. I mean, they grew their revenues by 14% despite the general fall off in advertising expenses across companies as a cost containment measure during the pandemic. And I agree, they're going to see some benefits from the full consolidation of the 1834 investments, along with the upcoming sporting activities towards the latter part of the year. So it's definitely a long-term buy for me. Now let's continue with PanJam Investments Limited. PanJam continues to deliver solid results. Their total income, though, remained relatively flat for the quarter. They booked $774 million for the quarter ending March, relative to $784 million for the same quarter last year, March. This is driven by a 5% uptick in their investments portfolio to $236 million, up from $224 million last year. Their operating expenses increased 30% to $551 million relative to $422 million reported last year. We're seeing this translate to a 39% decline in operating profit for the quarter to $226 million relative to $371 million reported last year. Profit from associated companies, however, saw a 28% increase to $1.1 billion relative to $902 million reported last year for the quarter. This translates to a net profit of $1 billion relative to $1.01 billion last year, so a 5% increase in net profit attributable to shareholders. PanJam continues to grow its asset base. We can see here that their assets have increased to $66 million relative to $62 million reported last year, and their equities have bumped up to $50 million relative to $47 million reported last year. So the company still remains solid. Examining their quarterly performance, we can see here from the graph that for the quarter, which I mentioned earlier, Their revenues increased 5% to 1.06 billion relative to 1.01 billion. And this is an improvement from the quarter in 2020 where they reported 491 million. Examining their stock price history, we're seeing where PanJam closed the trading period yesterday at $65.15. We saw a high of $70.51 in the first week in March and a low of $62.37 in the third week of May 18, 2022. I think PanJam is a great company. Whilst their operating income remained relatively flat quarter on quarter, they continue to increase their asset base through their investments in associated companies while keeping a healthy leverage ratio. They also have a great diversification strategy going on here to hedge against market shocks. They also announced in their AGM a month and a half ago that they're making strategic moves to increase their trading portfolio and their real estate portfolio. We'll also see some benefits from Sagicor's full purchase of Alliance Financial Services. Lastly, the Rock Hotel should be coming on board this summer. So the long-term horizon for PanJam seems great at a stock price of $65 and a PE of 10 times. PanJam is definitely a hold for me. What are your thoughts, Percival?
I totally agree with you, Rachel. I know that PanJam, for me, is one of those companies that has always been strong. They have strong financials, good fundamentals, and even though they have seen a decrease in the stock price moving from a pre-pandemic level of over $100 trading consistently in the low $60 bracket, there will be some correction of that. There has already been some correction in terms of their rental income, which they are generating. During the pandemic, the investment income really steadied and balanced their portfolio, coupled with the fact that they have a diversified portfolio, so they had income coming in from various aspects of the company. So it is my view that moving out of this post-pandemic phase, as the company increases its revenue from rental income, we also anticipate an increase in revenue from investment or interest income, then the price will continue to go up. It's trading at $65.15, a massive discount. It's a stock that I think you should be buying to add to your portfolio for the medium to long term. And also to add, PanJam is one of those companies that pays very good dividends. So if you're looking to steady your portfolio even in this period of uncertainty, you should be looking to add PanJam, you should be looking to add RJR, and definitely you should be looking to add Fesco to your portfolio.
Thanks for that, Percival. I definitely agree. So let's see in the 12 months to come if we see PanJam trading back at $100, like what we saw in December 2019. Thank you for your comments. Percival will now bring you some insights from our special segment. So what do you have for us today, Percival?
My advice is simply this, and I think it is very fitting for the period that we're going through where trading and investment markets is concerned. Wherever there is an obstacle, there's always an opportunity. Whenever there is an uncertainty in the market, there's always an opportunity. I couldn't put it any better than using Warren Buffett's own words. When everybody's looking to sell, that's the time you should be looking to buy. And when everybody's looking to buy, that's the time you should be looking to sell. It doesn't matter if there is uncertainty. It doesn't matter if there are talks of a recession. There's always an opportunity in the market for the savvy investor.
Thanks for that, Percival. I definitely agree. I love the fact that you said there's always an opportunity. That's definitely the truth there. So viewers, if you want to start your investment journey, please reach out to Mayberry and let them share all these wonderful opportunities with you. That's it for today's discussion. I would like to thank our viewers for tuning in today. Your support is always appreciated. I'd also like to thank my fellow panelist, Percival Braham, for his contributions to today's discussion. Thanks, Percival. Be sure to look out for updates on our virtual investor forum by following us on social media. We share our live stream dates and upcoming guests on our official social media pages. Follow us for all things forum related and click the bell to receive all notifications. Don't forget, subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe and remember, wise investors, slow and steady wins the race. Thank you. Bye bye.